thank you to everyone for joining Robinhood's Q2 2025 earnings call, whether you're tuning into the live stream at home or here with us in person. With us today are Chairman and CEO Vlad Tenev, CFO Jason Warnick, and VP of Corporate Finance and Investor Relations Chris Cagle. Vlad and Jason will offer opening remarks and then open the call to Q&A. During the Q&A portion of the call, we will answer questions from institutional research analysts, and we will also answer questions from finance content creators who may hold an ownership position in Robinhood. As a reminder, today's call will contain forward-looking statements. Actual results could differ materially from our current expectations, and we may not provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and in our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most directly comparable can be found in the earnings presentation. With that, please welcome Vlad and Jason.
All right. Greetings and salutations. Hey, Jason.
Hey, Vlad.
It's great to see everyone today. We're actually back in New York City at the NASDAQ where we had Investor Day in December. I see some familiar faces. Also great to have institutional analysts and some finance content creators. I see some finance content creators as well with us today. So that's Robinhood live audience for the first time, always innovating across every aspect of the business, and the earnings is no exception, right? So let's get right into it. Second quarter, I think we really kept raising the bar with industry-leading product velocity across our three focus areas. Number one in active traders, number one in wallet share for the next generation, and the number one global financial ecosystem. So why don't we dive in a little bit? Our active trader offering just keeps leveling up. Record trading volumes in Q2 across equities, options, prediction markets, index options, and futures. And by the way, pretty awesome that index options volumes grew 60% from Q1. And event contracts more than doubled from Q1 to nearly $1 billion in Q2. I think these results were driven by relentless innovation, including in Q2, new tooling capabilities for mobile, Legend, the team's rapidly shipping updates, Cortex for Gold members, starting with Stock Digests, which have been used by hundreds of thousands of our customers. And the best is yet to come. After 3 great product events so far this year, we're hosting the second annual Hood Summit for active traders. That's going to be an event in Las Vegas in just a few weeks. And it's going to be much bigger than last year. Last year's event was pretty big, but this one should be twice as big. So that's very exciting. We're also working to serve far more of our customers' assets, which have doubled year over year to more than $250 billion. How amazing is that? A few highlights there. Average assets per funded customer was over $10,000 for the first time, nearly doubling from a year ago. So a lot of people thought, Robinhood's always going to be in the low single-digit thousands per account, but we just keep compounding, and that assets per customer keeps marching upward. Robinhood Strategies, we've grown that by multiples, now over 100,000 funded customers and over $500 million in assets. So just a few months after launch there. We've tripled Robinhood Gold cardholders year to date, so over 300,000 cardholders. We continue to like what we're seeing, and we're going to keep accelerating the rollout from here. Retirement assets are now over $20 billion in assets. So this is customers entrusting us with their most long-term serious money, and that's more than doubled in the past year. And we're excited to launch Robinhood Banking in the fall, so customers can bring even more of their assets into Robinhood. Now, actually, with banking, we just rolled this out internally to the full employee base. It's really good. I think we're putting the finishing touches on it. I think you're really going to like it, and very, very innovative offering. So plenty more there. Global financial ecosystem, we've been pushing even harder there. So I'm sure many of you saw our crypto event in France to catch a token. We expanded our European offering to 30 countries, serving over 400 million people, including stock tokens, which I think tokenization is the biggest innovation in capital markets in over a decade. Stock tokens will do for stocks what stablecoin did for fiat currencies. Benefits to users including 24/7 trading, instant settlement, the power of self-custody, and also gives us the ability to expand to other assets, make all sorts of assets that previously weren't inaccessible to retail, tradable 24/7, just like any crypto asset. So that includes, of course, private markets and lots of other real-world assets. Perpetual futures coming soon in Europe, and that's been very, very well received actually when we announced that. So very excited to roll that out. The US is not far behind. Ton of legislative progress. You guys know the Genius Act just passed. We've launched staking in the US with over 750 million staked in just the first month. So pretty incredible progress for staking in the US. Bitstamp exchange by Robinhood, that acquisition closed, so we now have a growing institutional business, and we think that's gonna be a big one over time. And of course, the Robinhood chain. To my knowledge, the first layer 2 blockchain that's optimized and built with real-world assets in mind. So wrapping it up, as a result of this strong product velocity, great business results, revenues up 45% year over year to nearly $1 billion, the third highest quarter of net deposits ever, sixth straight quarter over 10 billion actually for net deposits, and that's continued through July. The strong July for net deposits puts us on track to exceed last year's total, which was 50 billion in net deposits, which was again a record. Gold subscribers up to a record 3.5 million. The Gold team's been doing a very, very nice job. That's 13% adoption when you look at our overall customer base. But if you look at new customers that joined in quarter, north of 35% adoption. So that's been really good to see. And we now have over 600,000 international customers when you fold in the customers we get via Bitstamp. So that's becoming a bigger and bigger part of the business. So we feel great about Q2 product velocity and results. I'll turn it over to you, Jason, to talk about financials before taking some Q&A.
Sounds good. Thanks, Vlad. Q2 was another great quarter as we drove market share gains, closed the acquisition of Bitstamp, and remained disciplined on expenses. As a result, we grew revenues 45% year over year, drove 81% incremental adjusted EBITDA margins, and doubled EPS from a year ago. Let's take a closer look at Q2 compared to last year. Revenues were $989 million. It's driven by strong year-over-year business growth. Trading volumes were up double to triple digits across all categories. Looking at some of our newer products, Q2 contract volumes were 11 million for futures, 17 million for index options, and nearly 1 billion for prediction markets. So a lot of good momentum there on the new products. Interest earning assets were up over 50%, driven by cash sweep, margin, and strong securities lending activity. And it's great to see our gold cash sweep balances have crossed 30 billion, up more than 10 times since we started the high yield offer less than 3 years ago. And for Robinhood Gold, we grew it to 3.5 million subscribers. That's up over 75% year over year as we continue to broaden the value proposition. We also stayed disciplined on expenses in Q2. Adjusted OpEx and SBC was up just 6% year over year, leading to 56% adjusted EBITDA margins. Now for Bitstamp, as I've said previously, we expect about $65 million of costs in 2025. So we're layering that on to our full year outlook for adjusted OpEx and SBC, bringing it to 2.15 to 2.25 billion. As a reminder, this outlook does not include costs from our anticipated acquisition of WonderFi or provisions for credit losses. As we enter Q3, we're off to a fast start in July. Net deposits are around 6 billion. It's a really nice pickup from May and June. Equity and options trading volumes are setting new monthly records, and crypto volumes for both Robinhood and for Bitstamp are at 6-month highs. So really great start to Q3. And we continue to see customers responding to our great margin rates, with margin balances now around 11 billion. So our momentum is strong entering the second half of the year, and we remain focused on driving another year of profitable growth in 2025. With that, Chris, let's turn to Q&A.
All right, thank you, Jason. For the Q&A session, we'll start by answering 2 top questions from shareholders on Say Technologies, ranked by number of votes. We passed over questions that we already addressed on this call or in prior quarters and grouped together questions that shared a common theme. After the Say questions, we'll turn to questions from our live audience. All right, so the first question is from Tarun K, who asks, when will Robinhood Banking be broadly available to customers?
Awesome. Yeah, I'll field that one. Thanks for the question, Tarun. As a reminder, we announced Robinhood Banking at our Lost City of Gold event in San Francisco a couple months ago. And the idea behind Robinhood Banking, which is what inspired us to create this product, was that we wanted to deliver the private banking experience, which has typically been a high net worth experience, in digital form to the mass market. And so you have the best of private banking, which is high yield, things like estate planning, seamless integration between all of your other accounts, really nice net worth tracking, along with some innovative features like cash delivery, which actually we've started testing and piloting in the initial markets. So as I mentioned earlier, we've rolled that out internally, Robinhood Banking. It's making good progress. It's looking really, really good, and it's still on track for rollout to customers later in the quarter.
All right, thank you, Vlad. The next question is from Lewis H, who asks, does Robinhood have plans to step more heavily into lending, such as personal loans, auto loans, mortgages, and other products?
I'll start, and Vlad, feel free to jump in. As we've said over time, we want to be the place to custody all of our customers' assets and process all of their financial transactions, and I think lending plays right into this. You may have seen that through a partnership with Sage Home Loans, Gold members now have access to really great rates on mortgages. And one of the reasons they're able to deliver such great rates, and we're able to deliver such great rates to customers, is we're passing all of our share of that of the economics on to customers. And the early feedback has just been really tremendous. So if you're looking to buy a home loan, please become a Gold member and check out the rates. We're also already providing some forms of credit. We've got the Gold card. Vlad mentioned 300,000 card holders. We have margin, and over time, we've got pretty big ambitions across all transaction types.
All right. Thank you, Jason. All right, so we're going to now go to questions from our live audience, and we're going to start with Steven Chubak from Wolf Securities. Let's get him a mic.
Jason, Vlad, thanks so much for hosting this event.
Steven, good to see you.
Good to see you too. Maybe just to start on net deposit momentum, because in the second quarter, we did see a bit of a moderation. I know Steve Quirk spoke to some adjustments to promotional activity. You launched some promotions again alongside the crypto event, and then we're seeing a re-acceleration in net deposits in July. And wanted to get a better sense as to how the strategy is evolving around net deposits and promotional activity more specifically, and given the attractive payback economics, why not lean into promotional activity a bit more? Why retrench or pull back any of the promotions at all?
Yeah, do you want me to? I'll go ahead and...
Yeah, why don't you take it?
Yeah, I'll go ahead and start. So first of all, we love the promotions, and what's great is customers love these promotions. As you mentioned, the economics are incredibly compelling. And when we launch these promotions, we tend to see larger balances from customers come in, and that's showing up in our overall averages. Promotions are part of our playbook. We intend to continue to do it. We measure the economics on all of these promotions, and we watch the customer response. We had a really good promotion around crypto deposits where the community reached the goal, and we doubled the match rate to 2%. So, really good opportunity there. I wouldn't read too much into the activity of promotions in Q2. Like I said, it's part of our playbook, and we really like that.
Yeah, maybe I would just say two things. One is net deposits as a metric does have some volatility that's driven by traders. So, if the market is moving in crypto or in other asset classes in a particular direction, traders deposit money to take advantage of those opportunities, buy the dip, so forth. So there is a component that's going to fluctuate up and down. But if you look over the long run and you sort of like smooth out the inter-quarter, the trajectory for net deposits in this business has been quite strong. And I think if I look at the tailwinds coming up, continued customer engagement, growth in new products, expansion into banking, and all these new asset classes that are just ramping, all of that we believe will make the long-term trend of net deposits grow. And I think we're in a position where we've gotten more sophisticated about how we look at all marketing activities, and we're increasingly looking at these promotions alongside performance marketing and our other tools in one bucket. And I think we're fortunate to just see high ROI opportunities across the board. So we've scaled marketing quite a bit already this year, and it's been looking good. So we have to balance scaling it with making sure that we keep costs in line and we deliver that profitable growth that the team's been doing such a good job in delivering.
All right. Thank you, Vlad. Thank you, Jason. All right, the next question is from Dan Dolev from Mizuho.
Thanks, guys.
Dan?
Amazing quarter, as always. And so my question is more broader. You had this really nice event in the south of France recently, and can you maybe talk a little bit about the long-term strategic opportunities with private, tokenization of private assets and some of the feedback you're getting from the market on all these great announcements that you've had just 20 days ago or so? Thank you.
Yeah, I mean, if you look at the To Catch a Token event, I'd say it exceeded our expectations. I think for an event in Europe to have it watched 25 million plus times, I mean, we were just talking about, we were just talking a little bit earlier, that's more than many movies, right? So I think the team did a very, very nice job. I think it did two things. One is it was sort of a blueprint to the rest of the world of what can happen when you have clear regulatory clarity around crypto assets. And what's going to happen is a lot of the criticisms about crypto assets being sort of not tied to anything of fundamental value or mostly, meme-based goes away because you can actually tie the technology to things that have fundamental utility. We've seen that a little bit with stablecoin in the US, and I think tokenization of real-world assets just extends that concept. We've delivered it for exposure to public equities in Europe, but we've also demonstrated it with private stocks in Europe in the form of the giveaway. And I think the reception to that was very positive. I mean, it's clear customers want this. They not only want it in Europe, but they want it in the US as well. And I think it's currently a big problem, a big iniquity that more and more companies are staying private longer, and a lot of the big gains are reserved to private investors that are high net worth or institutional. So we are working to not just create a giveaway, but to turn this into a real product that's usable both in the EU and in the US. And we're excited to do that. I think we see a path to actually make that happen. Well, yeah, I think two things: demonstrate the power of crypto technology and show a roadmap to what Robinhood could be if it was rebuilt from the ground up on crypto rails. And I think there's a ton of benefits there. It also solves some pain points for European customers. And I think since that event, we've seen an acceleration in our European business, and we think we see a path to that being a bigger and bigger piece of Robinhood over time.
I think the event also was a nice highlight to our product velocity. We've had a number of pretty successful customer events this year. In September, we have one for active traders, Hood Summit, but really proud of the team for how quickly we're building.
All right, thank you. The next question is from Ed Engel at Compass Point.
Hey, thanks for taking the question. We've seen a couple more fintech companies start to apply for with the OCC for banking licenses. Curious whether your mindset has changed on that, especially just given some of the recent rollouts you've had on the banking side.
Yeah, maybe I'll field that. Feel free to jump in. I would say, first of all, we're always looking at the landscape and sort of like making decisions about where we see opportunities. You might remember 2019, we applied for a national bank charter with the OCC, and the impetus for that was we wanted to get into high yield products to allow customers to generate more yield on their cash. And what we found was we were at this interesting inflection point where the partnership ecosystem around banking improved to the point where you could produce an even better savings product, the partnership route. And you could see that not just with the yield, but also the multiplicative FDIC protection. So by partnering with banks and creating this FDIC product, we could actually offer you a very high yield and multiples of the FDIC protection. And Jason mentioned that's grown to over 30 billion in our cash sweep. So that's been very, very successful. And now with our partnership with Coastal through Robinhood Banking, we're going to be able to offer a very competitive rate on actual savings accounts as well as checking. So basically, we found that thus far, we've had all the capabilities available through the partnership model. And so the kind of cons have outweighed the pros of getting a charter. But we're always open to reevaluating it if the balance shifts and there's something that's much easier to do with the banking charter, especially as we get into more of these lending products. We're nimble and we can reevaluate quickly.
All right, now let's take a question from one of our finance content creators, Amit from Amit Is Investing.
All right.
Vlad, Jason.
Finance content creator. Good to see you.
Congrats on a great quarter, and congrats on innovating on the live event experience for earnings. Currently, right now, you guys have about 3.5 million gold subscribers, which seems to be the least cyclical part of the business because it's reoccurring SaaS revenues on that yearly subscription. More broadly, how are you guys thinking of protecting the business from cyclicality in the face of market volatility, rate cuts leading to a loss of net interest income, and anything else that could keep that type of growth going as sustainable as possible, given one of the biggest criticisms I've heard is that Robinhood is a very cyclical business?
Yeah, I mean, first of all, compared to just a few years ago, Amit, we're far more diversified. If you take just even the crypto business, that's diversifying. We launched a number of products. Staking in the U.S. is now taking off, tokenization of U.S. equities in international locations. But what we're seeing in crypto is happening across our business. And you've heard me say that we have 9 businesses with over $100 million of revenue, and we have a number of businesses that have a lot of momentum towards being the 10th and beyond. The other thing that I would say about kind of in the topic of like protecting your business against cyclical movements, well, really two things. The first is that the way we manage our business, and we talk about being lean and disciplined, positions us in a place where when cyclicality hits, we aren't like some companies that really have to pull big on levers because all along we've been disciplined. And you saw that we grew revenues 45% year over year, and adjusted OpEx plus SBC was up 6%. And so it's really kind of shining through, and I think it positions us in a position of strength should those kinds of situations happen. The other thing that I would say is I would caution us from not overreacting to those situations. The market opportunity and the TAM that we talked about in this venue back in December is massive. We have a massive TAM ahead of us, and I wouldn't want to rotate in a moment of cyclicality when the market opportunity in front of us is so big.
Yeah, and I would just add that, I think that was a legitimate criticism of the business in 2021 when we went public. I mean, it was just a retail boom driven by multiple things, including zero interest rates. We've been able to diversify our business in a high rate environment, and we've been talking about the natural hedge of as rates go up, interest income goes up, but transaction revenue goes down. So we've been able to drive these results in what's been historically still a pretty high rate environment. And 9 business lines with 100 million or more in annual revenue, and we've got some that are on deck in kind of the 50 million range. And there's a whole bunch more little seeds that we've either just launched or are going to launch in the future. So in 2021, when we went public, it felt to me like we were much more fragile than today. I mean, product velocity was a little bit gummed up with all the work that we did to deliver for that scale that we saw during COVID. But now, the roadmap, if you look at things that we expect to deliver in the short term, medium term, and long term initiatives is pretty packed. So this is probably the least diversified you should ever see Robinhood.
All right. Next question from Gautam Chigani from Bernstein.
Spoke about the tokenization opportunity in Europe. But obviously, there's a regulatory path in the US to make tokenization, particularly equity tokenization, relevant for US. How do you see that playing out when it comes to regulatory approval for equity tokenization, particularly in view of the comments that came from the SEC post your event?
Yeah. So I think that tokenization in the US is interesting. If you think about the relative delta between the tokenized equities experience and untokenized, which we've already built to scale here in this market, you get 24/7 versus 24/5. You get some access to self-custody and all the benefits of on-chain, which could mean things like collateralized lending and borrowing, which are a nice benefit, but we already have industry-leading margin rates. And then you have sort of the cost aspects. Obviously, if more and more of the infrastructure goes from centralized legacy counterparties to blockchain, where it's essentially public infrastructure, the cost of operating the business would go down, which would accrue eventually to customers in the form of more value. So I think the opportunity, there are benefits, but we're already offering customers very, very close to sort of what they would get in the US. Overseas, a lot of customers don't even have access to US equities. So we think that we're going from zero to a great experience that we can scale globally to not just hundreds of millions, but potentially billions in addressable market over the coming years as it gets more widespread. So I think it's different. And in the same way, stable coins among retail have been largely an ex-US phenomenon. And of course, they're coming into the US, but the US already has the benefit of pretty robust payment and banking systems. I think the real opportunity in the US would be tokenizing assets that were previously inaccessible. And I think we're working with regulators to make that possible. I think those are private markets and related real world assets are opportunities that don't exist up until now. So some things need to happen. We need to look at accreditation laws. We also are on a good path with securities tokenization, but that has to continue, and we think we can unlock that opportunity.
All right. The next question is from Devin Ryan from Citizens.
Thanks so much. Hi, Vlad. Hi, Jason. Excellent results. would love to ask one on tokenization, but I'll ask something different here. Sec lending really ramping nicely, 54 million. In June alone, I think it was up 160% year over year, becoming actually a material revenue line item. And historically, we've seen that kind of ramp as capital markets turn back on and IPOs and hard to borrows kind of accelerate. So can you maybe frame out how you're thinking about the opportunity there? Is the book today so much bigger? The IPO market is literally just turning on, so it would seem like there's potential acceleration there. So is that June number a jumping off point if IPOs continue, or how should we think about that?
Yeah, great question. June was a record, and July is equally as strong, if not stronger. There are definitely strong market backdrops. First of all, great job by our securities lending desk. I thought the team did a really nice job. We've been onboarding a lot of customers. Customers have been adding a lot of assets into our fully paid program. At the same time, our margin book is growing, and that creates inventory for the sec lending desk as well. With the market backdrop, what I'd say is that there were a handful of hard to borrows that had attractive returns in the quarter as well. So that continued into July, as I mentioned. We'll have to see, how that goes, for the rest of the quarter and beyond. But I really love the strong inputs of adding customers, a growing book, adding assets into the fully paid program as well.
All right. Our next question is from Alex Markgraf from KeyBank.
Thanks for taking my question, Jason. Maybe on crypto monetization. Thank you for the Bitstamp disclosure, but just on the core Robinhood monetization, can you talk a little bit about what you saw in the quarter and any effects you're seeing from smart exchange routing so far?
Yeah, so just as a reminder, so customers have two ways to engage with crypto trading at Robinhood. First is the method that we've had for a long time, which is a market maker method. That's where we get a rebate. We've been experimenting with pricing for some time, and you've seen us taking that up, and we watch closely to make sure customers are continuing to get a great deal. Just last week, we moved the rebate rate to 85 bips, so that's in place. The second way that customers can engage is direct with the exchange through the smart exchange router, and that's really opening a volume tier discount. And based on volume, traders can achieve a 10 basis point commission on direct to exchange trading. And so far, it's early, but we like what we're seeing there. Customers are bringing, as they adopt direct to exchange, they're bringing more volume, and they're achieving more competitive rates, which is great. And we want Robinhood to be super attractive to high volume traders. But what's great to see also is that revenue per trader is going up for those that are choosing to engage with the exchange. So more revenue on the higher volume trading as well, even though it's a better rate. So that's what we're seeing so far. In Q2, we saw the blended rate or the average rate at 58 basis points in the quarter. In July, through the month of July, it was kind of in the mid-60s. So it has moved up a little bit.
All right. Thank you, Jason. We're now going to branch out to the audio queue. And so the first question we have on the line is from Patrick Moley at Piper Sandler.
Yes, good evening. Thanks for taking the question. So I just had one on the credit card offering. You noted that you've tripled the number of card holders year to date, but I think balances are only up about 45%. So I was hoping you could just elaborate on what you're seeing from credit card holders. Are you seeing, the economics that you'd like there, and how should we think about you ramping that into the end of the year? I think you said that you plan to accelerate the rollout, so any additional color there would be greatly appreciated. Thanks.
Yeah, we like what we're seeing on the economics. We've been meeting with the team regularly. When we look at the revolve rate, that's in line with what we would hope for, and the book is performing really well at this early stage. We're gaining confidence and looking forward to putting that in the hands of more and more of our customers.
Yeah, and I would just add that if your question about balances, it usually takes balances a little bit of time to increase on the revolve. So it's not like if you increase cardholders by 3x, the balances don't immediately increase by 3x. There tends to be a little bit of a lag. So that's why you're seeing that.
All right. The next question is from James Yarrow at Goldman.
Thanks for taking the question. Maybe could you just perhaps preview a bit more on the Robinhood chain? Maybe you could just talk about the advantages of building this for real world assets, and then maybe just competitive advantages here versus other layer 2 blockchains, and then finally just any update on timing.
Yeah, absolutely. And actually, since our event, we've just gotten lots and lots of calls for developers that either want to tokenize the shares of their own companies or otherwise jump on the tokenization of real world assets revolution and partner with us. I think the big advantage that we have with the Robinhood chain is that we have a captive audience of over 25 million customers in the US with now over $1 trillion in assets under custody. So obviously we think that we can build a great developer ecosystem